Morning, Steve Freed in Chicago with the morning grain comments. Well, the financial markets have been rocking and rolling overnight because, first of all, there was some news that there might be some positive news between U.S. and China, which caused some bottom picking in the stock markets. Then there was a Chinese group that came out and said that they will retaliate against the U.S. if U.S. imposed tariffs in December. Market broke, and then now there's some talk about actually the President of the United States and the President of China have been talking on the phone, have been exchanging letters, bringing up maybe a hope that there might be a face-to-face meeting in September. That's helping the stock market. Beans are also up about 4 cents, corn's up 3 cents, and wheat's trying to recover from being a little bit lower. You got the stocks now higher, and gold has actually went from higher to lower. So in general, we're trading three things. Number one, trade issues is really making the market volatile. Number two, the funds have pretty much gotten out of their corn and wheat positions as we get closer to the end of this crop season, and after the USDA gave out the surprise higher acreage and yield numbers on Monday. It was interesting that the head of NASS came out and said that the corn acreage that they put out, as far as planting, are all purpose. They're for grain, they're for silage, and maybe some of those acres may not get harvested. A lot of questions about how they came up with 90 million acres plus 11 on the prevent plant. Does that suggest that farmers were going to intend to plant 101 million acres? And so what does that mean as far as down the road as far as harvested acres are concerned? We also have next week the Pro Farmer Crop Tour, and we'll see if they agree state by state with the yields that the USDA came out with their satellite imagery. That was the first time in the August that they used that kind of data to come up with the yield. In September, they will actually use data from the objective yield. It may not be as good as normal because the crop is so late and they don't really have a lot of ear weight and pod weight to plug in to something that is considered normal. We also will be looking at the demand side of things. Export sales in wheat, 2 to 500,000 tons, 2 to 700,000 tons of corn, and 150 to 700,000 tons of beans. Again, these numbers are below the pace to get to the USDA's export numbers. We also expect an NOPA crush of 155 million bushels, which is up from the 149 in June, but down from the 167 last year. Soybean oil stocks could be near 1.5 billion pounds, unchanged from June, but down from the 1.7 billion pounds a year ago. And finally is weather. U.S. Midwest weather for the near time shows some rains across the northern two-thirds of the Midwest. 11 to 16 day, the models are still confused with the GFS American model showing average temps to slightly below average precip, and the European model showing below average temps and above average precip. So we're kind of in this $8.75 to maybe $9 trading range in the November beans. Could corn be oversold with some bottom picking by end users the last couple of days? And is wheat oversold? We are competitive in the export market versus Russia, but overnight the Europeans came out and said that this year's crop is going to be closer to 143 million tons versus 140 in their previous guess, and their exports could be close to 25 million tons versus their first guess of 22. So in general, we've got a lot of volatility in the market that adds to the uncertainty of positions. It seems like beans are in a trading range, still overvalued given the large supply of world beans and the uncertainty of Chinese imports. And corn and wheat may be trying to make a bottom after the sharp sell-off that we've seen over the last month. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day.